common tax savings for business owners. Part 3, electric cars. Now, electric cars work very well for a couple of reasons. Essentially, the limited company gets corporation tax relief, and the benefit in kind for using a company's asset personally is a low benefit in kind. So to put a bit more meat onto that, there's 2 ways the vehicle can go through the company. Number 1 is the company either buys it or takes out some finance against it, like a hire purchase. If you do that and the electric car is new and fully electric, that cost is fully expensable for corporation tax in that year. So if your company makes £50,000 and you buy a £50,000 electric car, there's going to be no corporation tax to pay, because that expense will just wipe out the profits. Now, the other way to do it is a lease. So if you're leasing the electric car, the company will get corporation tax relief on the expenses of that lease each year that go through the company. There's a couple of other nuances, like if it's leased, you can claim back 50% of the VAT. And if you do the first method of sort of buying it outright or hire purchasing it, when you sell that asset, because you've claimed tax against the cost of it, when you sell the asset, that's deemed to be income, which is going to be subject to tax on the business. So a couple of little caveats there, but it does work well for tax. It can go through the business. Then, like I said, the benefit in kind rate is low, although it is going up, but at the minute you're looking at a 4% benefit in kind rate. So what that means is, if it's a £50,000 electric car, benefit in kind charge at 4%, it's going to be £2,000. On that, you are going to pay tax, and the business is going to pay employers' national insurance. It's quite a low rate. If you think if you're a basic rate taxpayer, 20% of 2,000 and 15% employers' national insurance on that £2,000, it's not going to break the bank. The often overlooked benefit of this is you don't need to pay for a car personally. So if you're paying for your car personally, that means you need extra money out of the company. So if you're paying for a £50,000 car personally, or leasing a car, let's say it's costing you 800 quid a month. I don't know how much these things cost, but if you're leasing a car personally, 800 quid a month, you need to take 800 quid out of the business each month, which is going to be subject to tax as a dividend. So a lot of benefits in that one. Some people don't like electric cars and don't do it, that's fine, but it's an option there.